Yes, Tesla is crashing again, and we see a rather powerful bearish pattern today, a top sign just below its key resistance levels. So is there any hope for a bullish reaction, or could this be the beginning of a long squeeze? In this video, I will update the most important key points on Tesla. Welcome to the Finance Hydra channel. My name is Nathan. Let's analyze Tesla's price action. Let's do our multiple time frame analysis on it as usual. Now, in the daily chart, yes, the situation is quite bearish. It looks bad. It does not look good. However, if we take a look at smaller time frames in the short term, Tesla is still in a bull trend. It is still doing higher highs, higher lows, trading consistently above the 21 EMA over here. So it is still a bull trend. So as far as I know, this could be just a pullback to the 21 EMA, and right now we are preparing to bounce to higher levels, potentially to the Fibonacci's retracement at 138, 140 over here, the 38.2% Fibonacci's retracement. This is a real possibility. So what's the catch? What is the most important key point over here on Tesla? It is the 21 EMA. If Tesla loses the 21 EMA, it is going to frustrate the bullish sentiment. I'm not saying it is going to do a bearish reversal structure yet, because there is no lower highs, lower lows on Tesla yet. But if it loses the 21 EMA, I do believe it is going to at least frustrate the bullish sentiment in the short, and it is going to reinforce the bearish sentiment in the long term. Meaning, by losing the 21 EMA, I see Tesla easily dropping to lower levels, maybe to retest the previous top level at $123. The 123 was a previous top level over here, and right now it is supposed to work as a support level according to the principle of polarity in technical analysis. Remember, previous resistance levels are going to work as support levels in the future, and vice versa. So this is it. If Tesla loses its 21 EMA, okay, I do believe we are going to drop to lower levels. But right now it feels like we are safe, all right? We are quite safe at this moment. Now, here's the problem. If Tesla loses the 21 EMA in the hourly chart, a pullback to the 123 is totally expected, but in the daily chart, the situation is so bearish that if we lose the 123, I believe Tesla is going to retest the $100 area down here, because it is going to just resume the bear trend in the daily chart in the midterm. Midterm speaking, we are still incredibly bearish. Unlike in the 1 hour chart, we are extremely bearish, doing only lower highs, lower lows over here. We don't see higher highs, higher lows on Tesla yet. At least not clear higher highs, higher lows. If you say, oh Nathan, we see a higher high, higher low over here, right? Well, maybe you're right, but it is not that clear to me, at least. So it is not that clear to me. I will remain skeptical. In addition to the 21 EMA in the 1 hour chart, which is around today's low, Tesla is doing a quite powerful bearish pattern in the daily chart. What is the name of this pattern over here? If you are my subscriber for a while, I think you remember this candlestick pattern. Memorize it. We're going to analyze it right now. Memorize this pattern. This candlestick pattern is a classic dark cloud cover candlestick pattern, as we see here on Bukovsk's website, thepatternSite.com. Here you will see some statistics regarding candlestick and chart patterns. So in theory, a dark cloud cover is a bearish reversal, and its tested performance is of bearish reversal 60% of the time. The above numbers are based on hundreds of perfect trades. So, okay, so the chances are not that high, but we are talking about 60% only regarding the candlestick pattern, because if we analyze the candlestick pattern in conjunction, combine it with other indicators like the 21 EMA, the first 38.2% Fibonacci's retracement over here. Tesla is doing a dark cloud cover under two meaningful resistances over here, and we are about to close under the 21 EMA. So this is not the ideal. This is a quite problematic situation, and this only increases the odds of a bearish reversal structure. This is why I'm telling you guys, if Tesla loses today's low tomorrow along with the 21 EMA in the hourly chart, I believe we are going to trigger a sharper pullback on Tesla, and this is going to be extremely frustrating because this might be the beginning of a long squeeze. Let's analyze other indicators. If you are watching this video so far, remember, click on the like button to support this channel and subscribe to keep in touch with my daily analysis. Now, if Tesla loses today's low along with the EMA in the hourly chart, it is going to do a long squeeze because, as we can see, Tesla open interest chart over here maturing to this Friday. We see many calls above 130. The 130, the 140, the 150, these three spikes over here, we see many calls around this area. So if Tesla drops and loses the 130s, triggering the dark cloud cover candlestick pattern in the daily chart, we will probably drop to even lower price levels, even under the 125 over here. So we are going to squeeze all of these, all of the bulls who are betting on a bullish continuation movement on Tesla's price action, at least until this Friday. So it is going to be quite problematic situation for the bulls over here. And of course, we see a huge, immense wall of puts over here around 100. So this is going to be a very strong technical support level on Tesla. I don't believe we could get there this week anymore, but still, it is going to be quite problematic situation for the bulls, and it is quite interesting to see all of these key points. They all match on what we are going to see on the charts: the 125, the 130, the 140, the 150. Keep in mind all of these key points, but first join the top 5% of traders that can actually make money and beat this market. We are doing insanely well so far. I think you guys are going to appreciate our community. Check my website, the link is in the description of this video. Now, back to Tesla's price action. It is quite funny because the 130, the first spike on the open interest on calls, it is around the 21 EMA. The 140, it is around the 38.2% Fibonacci's retracement, while the 150 is just around the 50% Fibonacci's retracement. So these key points, options and chart-wise, they are extremely technical. We can see the most relevant key points on both charts, the open interest and on the price action over here. It is quite important, and the 125, it is quite close to the 123 over here, which I have been mentioning to you guys for a while, right? Which is this previous resistance area on Tesla. So all of these key points are extremely important right now. By losing the 21 EMA in the daily chart, we see the bulls in a very difficult situation right now, but there is still time for a reaction. If Tesla bounces above the 21 EMA in the hourly chart, I believe there is still hope, and I believe Tesla is going to retest the 140 again. Let's keep these key points in mind for now. Remember, click on the like button to support this channel, subscribe to keep in touch with my daily analysis. I'm here every single day, my dear friends, keeping you guys updated on Tesla's price action. Thank you very much for your audience. Stay safe. Farewell.